Hello, if you are looking for entry points that are both accurate and reliable, this video is gold for you. Today we are going to look at a simple but powerful strategy that works with just two tools, RSI and Fibonacci. But here's the thing, we don't just want to trade these tools, we want to trade in the best areas, where there is the most confirmation and the probability of success increases dramatically. Are you ready? Let's go. Look, many people draw Fibonacci and look for signals at every level. But the truth is that not all Fibo levels are equally powerful. Among all the levels, an area called the golden pocket, i.e. the 50 to 61.8% range, is the most powerful. Why? Because both algorithms and big traders target this exact area. Now combine this with RSI, but not regular RSI. We use RSI with period 2, a very fast indicator that shows saturation conditions very early. If the price enters the golden pocket, and at the same time RSI2 shows that the market is oversold, then this is exactly the point where you can enter the trade with a high probability of success. We have four main rules for entry. 1. The trend should be bullish, that is, the price should be above SMA 200. 2. The price should correct and reach the 50 to 61.8% Fibonacci zone. 3. RSI2 in that zone should be below 10. That is, it is very oversold. 4. When you see a confirmation candle, for example a strong bullish candle, you enter a long position. The stop loss is below 61.8% Fibo, and the target can be a return to SMA 200 or even the previous high. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Now let's give an example. Let's say the price of Bitcoin goes from $30,000 to $36,000. Then it starts to correct. You measure that move with Fibo and see if it stops between 50 and 61.8%. Then you check the RSI. If it's below 10 and the candlestick makes a confirmation, that's where you enter with confidence. Also, if you have a positive divergence in the same area, your signal strength doubles. Divergence is when the price makes a lower low, but the RSI makes a higher low. This is a strong reversal signal. Another important point, if you trade on higher time frames like 4-hour or daily, the accuracy of this strategy becomes even higher. Because there is less market noise and the signals are more real, you can get more confirmations, like engulfing candles or pin bars in that area. The important thing is that this strategy, with its simplicity, can really be profitable if implemented with discipline and capital management. You can even use step entries in the Fibo area to optimize your average purchase. If you like this strategy, don't forget to like it. And if you want to see more detailed and practical tutorials, be sure to subscribe to the channel. Smart trading means combining the right tools at the right time and in the right area. The Fibonacci tool is based on the mathematical ratios of the Fibonacci series and is used in technical analysis to identify potential correction or reversal levels. Key levels such as 38.2%, 50%, and 61.8% are considered potential support or resistance areas. Of these, the 50 to 61.8% range creates the greatest convergence between buyers and sellers and is considered more reliable.